The smart money concept is a powerful tool for identifying entry points. It is so accurate that it is already used by many experienced traders to gain significant profits. I have discovered a super powerful and accurate smart money concept indicator setup with buy and sell signals. This setup can be used for day trading, swing trading, scalping, and can also be applied to all markets, including crypto, stocks, Forex, options, and futures. These indicators help you find important points on your chart, making you a better and more profitable trader. I will also guide you on how to use these indicators on your chart. Let's get started. Go to tradingview.com to check out the price movements on the chart. For demonstration, we are focusing on the pound sterling to Japanese yen currency pair using a 1-hour time frame. This strategy can be applied to different time frames and various financial assets, including cryptocurrency, Forex, and stocks. Now, let's break down what an order block is. An order block is a concept that shows when large financial institutions are accumulating orders. They use these order blocks to split big orders into smaller ones, getting better prices without disturbing the market too much. So it's essential for traders to know how to react when order blocks form, because they often create key decision points in the market. Thankfully, we have indicators that help us find these order blocks. Let's start by adding our first indicator. Click on the Indicators tab at the top left on your screen and look for the Pivot Order Blocks indicator. This indicator was created by TradingPool, and you can find it in the list of available indicators. Just click on it and add it to the chart. Now we have added the first indicator to our chart. Let's quickly go over settings and make some changes. In the input section, change the wick settings to body and set the box sizes to 30. You don't need to make any other changes in the style section. After these adjustments, click OK to proceed. The Pivot Order Blocks indicator uses pivot points and their psychological importance. Pivot points are specific price levels that can predict when the market might turn or reverse. They are calculated using simple math based on the previous day's high, low, and closing prices. Some traders use pivot points to find entry points, set stop losses, and plan their profit-taking strategies. The idea is to figure out where most other traders are likely to make similar moves, which helps in decision-making. This strategy works well because pivot points give traders establishment support and resistance level. The red and green blocks you see on the chart represents bearish and bullish order blocks. The smaller, faint white blocks are points of interest level. Also, this indicator doesn't label each block explicitly. When you see a green block, it means there is an accumulation of buy orders, suggesting you should look for confirmations before entering. When you spot a red order block, it indicates an accumulation of sell orders, helping you to make informed trading decisions based on market sentiment. Let's look at a specific example on the chart. When the price reaches a certain level, the indicator identifies these points of interest using the faint white boxes. Afterward, the price went down. Then a bullish point of interest appeared, causing the price to go up. But when a bearish block like the shown here appeared, the price dropped significantly. This suggests a strong accumulation of sell orders or a big sell-off. It's important to note that there is more to understanding these downward movements, which goes beyond this video scope. If you want to learn more about such in-depth content, you can find useful links to our Telegram channels with daily Forex and crypto analysis in the description of this video. Now, let's look at the second order block indicator. So you can choose the one that fits your trading strategy. In this chart, we're looking at the price chart of the euro to pound currency pair. To add this indicator, go back to the Indicators tab and search for the Market Structure Breaking Order by MBB. Click on it to add it to the chart. Next, let's quickly review its settings. In the input menu, you can adjust the zigzag length to 7 and change the Fibonacci factor value to 0.618, which is the golden ratio. You can also set the text size to normal, in the text color to white, for better visibility. You can either explore these settings or leave them as they are, as the indicator works well with its default settings. After making your adjustments, click OK to proceed. A bullish breakout happens when the price goes above the most recent higher heights, and it's shown as a green market structure break. A bearish breakout occurs when the price drops below the most recent lower lows, and it's displayed as a red market structure break. The indicator also uses zigzag patterns to highlight market structure by showing lows and highs. The order block can be supply and demand zones, helping trader to make decisions. This order block indicator is one of the most accurate and user-friendly tools I have ever encountered. It's a valuable tool for traders looking to improve their trading strategies. Here we have the United States dollar to Japanese yen currency pair on our chart, set to 1 hour time frame. Take a moment to see how accurate this order block indicator is and how price action follows these bearish and bullish order blocks. The zigzag line helps identify price highs and lows. The bearish and bullish market structure breaks provide confirmations for your directional bias. For instance, you could have used these signals to consider a short trade or a long trade. Let's look at another example to illustrate the effectiveness of this indicator. This time we are focusing on the pound sterling to Japanese yen currency pair with a 1 hour time frame. The market structure and break indicator effectively highlights the bullish order flow. Understanding order flow is essential for finding the right entry points and making timely trades. The zigzags helps track price highs and lows, and the market structure points helps identify potential changes to price direction. These tools combined can help traders make informed decisions and navigate the market with confidence. Now, let's explore the third indicator, which is the buy and sell indicator for this strategy. In this example, we are looking at the price chart of pound sterling to Japanese yen currency pair. To add this indicator, go to the Indicators tab and search for Twin Range Filter by Colom and McKay. This indicator is chosen for its accuracy for predicting future price directions. Click on it to add it to the chart. Once the indicator is added, let's quickly review its settings and make any necessary adjustments. In the input section of the indicator, change the fast period to 50 and slow period to 35 and the slow range to 3. You don't need to make any significant style changes, so leave those settings as they are. After making your adjustments, click OK to proceed. When you see a trending market with a successful pullback, the Twin Range filter provides a long signal. This signal suggesting that the price is likely to go up and continue the trend. To see how this indicator works together, let's also add the market structure and order blocks indicator to the chart. This combination helps you assess their accuracy and effectiveness together. When the market structure and order block indicator highlights an order block, it confirms a long trade entry signal from the Twin Range filter. In such a case, you could have entered a long trade at the close of the candle and set your stop loss below the order block using 2-to-1 risk ratio. Another confirmation comes when you see a break of structure, followed by a pullback and another long trade entry signal from the Twin Range filter. This gives you another opportunity to enter a long trade. A long signal occurs in an order block. You place a long trade, set a stop loss below the order block, and set a take profit at 2-to-1 risk ratio reward. By taking these positions, you will accumulate your capital very quickly. This strategy is incredibly powerful, but many people execute it incorrectly, leading to financial losses. So that's all for today's video. Thanks you for watching, and don't forget to push like button and leave some comments. See you next time. Bye.